what's up? Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. All right, let's get into this. Amazon stock split. Let's start off with Amazon stock split. This is what everybody has been talking about the whole day. It's split today, and I actually been doing some research on this. So stock splits have outperformed. So let me just make sure. I'll pull this up. But while I'm pulling it up, I know in the past we said to wait for Amazon to pull back, right? Are we still taking that approach to wait? Because what they're saying too is that a lot of people are getting dragged into the market. It's like quicksand because the market is still on shaky ground. But so many people are excited about Amazon stock split that a lot of new money's came in today, probably will come in for this whole week. So any caution for new investors that are just starting to invest off of Amazon? Is it a good time to buy Amazon, or should they just be a little cautious about not just Amazon, but the total state of the economy and the market?
If you guys are going to be patient, you will make profit. And if you don't, I'm not going to yell, no smoothie cup for me. If you don't listen, you're going to pay the price. So if you're going to hold Amazon for 5 years, for sure, please put 5 years in chat. Every person watching, you're good. If you are looking to flip or hold it for a short period of time, you're going to be in trouble. The low to boat price, I know stock club members, you're going to be mad, but 90.48 is the area I want you to wait to like load up at. But if you buy it now and you set it and forget it for 5 or 10 years, you'll be good. And if we made you money, please put yes in chat. For those who are new, who don't know, what I don't want to happen is you're excited, like how you were about Doge and Shiba and Solana, which was supposed to be decentralized. And we'll talk about that later. And then if you buy that 124 and it slides to 115 or 100 flat, you're crying. I want you guys, because you guys are the best group of investors ever. I want you to stay focused on prices that will pay you. So 90.48 and 100 is where I want you to load. If you buy it this week or today and just want to get it out the way, I'm not mad at you, but you have to hold for 5 years minimum.
Yeah, keep it as a long-term investment. And even that 90.48, that's like 2019 levels. And so if you look back to that date and where it's gone since then, for it to have a pullback like it is, it's like if you wanted to get invested in Amazon and you believe in the growth of it, and obviously we've spoken about it numerous times about where we think it's going to be the second half of this year and going forward, this is a good time, in my opinion. Like I said, if I liked it at 130, I should like it at 120 as well, because we're going to keep it long term. Shout out to everybody that actually pulled the trigger and actually made a decision to invest. So like a lot of people will say, hey, should we invest before the split or after the split? Most people will sit and they won't do anything. Right? And so, like I said, if you would have bought it on Friday and you bought one share, now you have 20. The problem is that now if you didn't, are you still willing to buy 20 shares when it's at $124? Or you're going to say, like, well, since it's $124, I'll buy 5 shares. And so you got to figure out what your plan is going into these investments. And so shout out to Neo Davis, my boy. We actually sat down and he was like, listen, I don't want to be on the sideline anymore. I want to be active. And so we actually sat down and drew up a plan, and he executed on his plan. His plan was to get to 1,000 shares. He bought 20. He saw it split. He bought more. And so now he's got a plan of where he wants to go. He wants to be part of that 1,000 shares, 100 doors club. So shout out to him. So there was a plan that was in place that we actually came up together. So I would encourage people, make sure that you have a plan and make sure you take action on the plan. You actually execute it, right? Because if you're just asking the questions for the hell of it, what's the point, right? The question was, should I do it before or after? Well, both have happened now. So what did you do?
Take advantage of it. I mean, we've slid down, and for everyone who was like, hey, it was too pricey. And I'll tell you guys this open and honestly, stock club members, I'm sorry. Amazon has been in the top 4 picks of stock club for 6 years. Hasn't been as cheap in a long time. Please take advantage of it. Once again, 90.48 and 100 flat is where I want you to buy. If you hold for 5 years, you'll be great. And if we made you money, please put yes in chat. I want you to go do. I don't want you guys to learn and not execute. I want you to be rich. If you want to be rich, please put rich in chat. You're good.
So, it's crazy, man. I remember you were thinking about getting in, and you said every day since it went up. Since we said that on Market Mondays 2 weeks ago, it went up 30%.
It's going to pull back though.
Right. So, it's going to have these ebbs and flows where it pulls back. But like, again, have your plan. Where's your entry point going to be? And make sure when you have the entry point, when it comes, execute. And if it does pull back, then there's another place to average down. Right. So you dollar cost averaging down. But don't get crazy with the dollar cost averaging, right? I know one of the things that I took that from you was like, listen, if I have to dollar cost average more than 2 or 3 times,
you messed up.
then I messed up somewhere. And so make sure that your prices and the points that you're going to get them at are important.
So here's some historical data.
Let's do it.
Since 1980, out of all the stock splits that have happened since 1980, compared to the S&P 500, in 3 months, there's companies that have split their stocks were up 7.8%, and the S&P was up 2%. In 6 months since the stock split, the companies that split their stock was up 13.9% on average, and the S&P was up 4.4%. And in 12 months, the companies that split their stock was up 25% compared to 9% to the S&P 500. So what does that say? Of course, the past is never a guarantee what will happen in the future, but it is a good indicator. So history is on the side of Amazon and Google and Shopify, probably
over time.
That they will probably outperform the market and outperform other in their space, even though nobody's really in their space, Google and Amazon space. But
they are the best.
So the odds are, looking at historical data, it looks very likely that Amazon, Google, these companies that are splitting their stocks will outperform the market in the next 1 year, 5 years, 10 years.
Are we going to put Shopify in there too?
Shopify,
dark horse. Yeah. But also too, quick quiz question. What retail company is better than Amazon, domestically or internationally? I know sometimes this seems so hard. Investing is really easy. Invest in the top 4. They're the best in the space. If you just literally, even in crypto, Bitcoin for a while, Ethereum, you have to go look out for the crypto regulations, because if they classify Ethereum as a security, it may change a few things. But if you invest in the top 2 or 4, you're good. Everybody, please put investing is easy. And then since you're a part of the free Market Mondays hedge fund, the free course, which is Market Mondays, I'm telling you what to do. Profit from my years of experience. And these are the ones I'm investing in. So if you can get in at 90, 48, 100, and for those of you that have already had it, I'm sure you woke up, you were pretty happy. Moving to the upside, by the end of the year, Amazon should be like a 157.92-ish. You'll be happy. All the investors that hold for a long term, every asset class, please write this down. Every asset that you own, hold for 10 years. All the gains are there, and you're good.
Yeah.
Yes. All right. So that's the Amazon stock split. Let's go over some quiz time. Ian talked about Urban One last week.
Yeah.
For the culture.
He's very passionate. Very passionate about Urban One stock.
$6.94 for those of you who say you don't have enough money to put in.
Did anybody, if you purchased any shares of Urban One, put 1 in chat?
Oh, I can't wait to see
this. Let's see what happens.
Oh, we got some ones. I see some ones over here in the Zoom.
Waiting.
YouTube said I'll wait.
Do we want the culture to win or not?
Urban One. Legendary situation. Okay. Okay. I see some ones coming in. 1. I didn't even realize that, but 1 for Urban One. That makes sense. Okay. I see a lot of ones. Coming in.
When you guys are saying, hey, I wish that we could do an AMC GameStop takeover. If you truly believe in culture and us doing better, we have to support the companies that we believe in that are backed by us. I want to see it in action and not talk. So I don't think many people will invest. That's my thesis, but I hope you guys do and pile in, and we can drive the value of this company up. You can't tell me that AMC actually provides more value than Urban One. It's just that their apes got into it and pushed it up. So
man, it stayed alive.
Yeah.
Similar. GameStop, same thing. We've seen it happen.
All right. Okay. All right. So let's go into this. What's the most important indicator in the market?
Quiz time. I want you to put it in chat. We've talked about it endlessly. It's not about us knowing. It's about you guys knowing. So I'll give you guys 10 seconds.
The most important indicator.
I mean, I think you say it every week. So
most important
not
indicator.
Yeah, I see some people.
This is a way to teach. Market Monday is an educational show.
Yep.
And if you remember being in school, that was one of the things that the teachers used to do is they would ask you a question. And it's not just about just dictating information. It's about having class participation.
Critical thinking is the key.
Yes.
Absolutely.
Critical thinking.
This is the participation from
There's only one.
Class participation, great.
yes. I see EMA, I see VIX, I see volume.
I saw quantitative easing in the chat.
Fibonacci.
Yeah, a lot of volume, a lot of volume.
Volume.
A lot of VIX.
200 EMA, VIX.
Trend. Okay. Price action.
PE ratio, EMA.
Yep.
Market cap and VIX.
Yield curve. Valuation.
Number one indicator in the market that moves the market is quantitative easing.
Quantitative
shout
easing.
out to the earners who put that.
Quantitative easing, ladies and gentlemen, for 500.
Ding.
Quantitative easing for 500.
And here's why. If the Fed is not printing money, it was an interesting report that only 12 out of 500 companies can actively produce profit without the Fed. 12. That's scary. So I know some of you are like support price action, but most companies have fallen apart without the Fed printing money. So if the Federal Reserve continues to print money and they're going to start tapering off bonds, they're not buying as much. June will be a critical month and so will September. But if most companies, especially growth, went up because of the Fed, now that they stopped, like when your parents are like, you on punishment, I'm not buying you any kicks, any shoes, then you go to school looking bummy, that's where we're at in the economy. And truth be told, you said it before with tech, without quantitative easing in Obama in 2008, most of the tech companies that we know and love now would not have gotten funded.
Yeah. I think Josh Brown said something really important the other day. He was like, if you're looking at growth stocks and you're looking at the trends from January, I want you to forget about that. Forget about that. Like, I don't even want you to refer to that anymore because the numbers inflated and qualitative easing will still happen. I want you to try to get a grip of what's happening now. Like, this is more of an indication. Like, we're going back, and it's ironic that we're literally going back to 2019 to see like what these companies are really worth. You know what I mean?
So what is happening in June? Can you just, you have referenced it a few times, but people might not understand.
So when the reason why we're going up because of the Fed was and the government was buying all the bonds, the bond market is falling apart. Federal Reserve got to a point where they just said, hey, we're not going to keep the market afloat. I'm tired. So now we have to produce. Companies have to produce actual profit. Like, here's a novel concept. Companies with a high profit margin should go up, and the ones that don't have that should fall apart. So now angel deals are going to fall apart. Those are people that take their capital and invest into other companies. So companies with low margin like Uber, Lyft, Instacart won't do as well. Peloton won't do as well. We are actually, please write this down. We're now in a real market. Everything prior to 2020 was really just it being propped up on steroids. Now we get to see who really can produce value, who has a solid revenue base, solid executives, and you've seen the same thing in crypto. That's why I told you last year, all of the markets are tied together because all the players are investing in every asset class at one time.
Sam just gave a dope analogy. He's like, yo, this is the playoffs now. Right? Like, so this is the play. We had the regular season, and now there's the playoffs, and only 16 teams are making it to the playoffs. And so we got to figure out which of those teams, which ones are actually making money, actually making profit, and have earnings that make sense. Like, I watched CrowdStrike have their earnings, and they blew out their earnings, and the trend was down. I'm just like, this market is pretty like, this doesn't make sense. But if you really understand what cybersecurity means for us now, especially in times of when we see conflict and war, and going forward, you understand, like, all right, now this is a position we need to stay in long term. This is a profitable business. So
go study 2007 to 2012, and then go study 1987 through 1999. You'll understand what kind of market we're in. It's a combination of like past recessions in one. And crude keeps going up. So when oil and gas, if we get back to 150, look how it was in 2007. It's tough. But if you were at InvestFest last year, and I gave you the target, too short, and be able to make 6 figures in the market, you're doing fine. That way you can hold on. Your job is to be able to invest and trade in every market, up or down, and make money. And if we made you money, please put yes in chat.
Hell yeah.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Whole going up. I know they can't stand it.